Hello and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host and the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. As always, nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. Another huge day for uranium, guys. Can it really be any other way with the volatility? It goes in both directions, but man, when this sector runs, it really runs. It's just so small. There's not that many equities that you can purchase in the uranium sector. So when real funds flow into the ETFs and into the space in general, the moves can be huge. I mean, we had a total portfolio return today that would be respectable for an annual return in traditional investing, portfolios. It's really astonishing how things can move here. But I'm going to dial into some of that a little bit further when we look at the charts, but let's get right into the daily scoreboard here. The price of uranium up a shiny quarter today, up 25 cents, coming in at 44.25 a pound mid-market. Friday, the Sprott Physical Uranium Trust took in $24.2 million of new capital, and it closed at a healthy premium 3.01% to their net asset value. They purchased another 500,000 pounds on Friday, 500,000 pounds on Friday alone. And the treasury swelled to 58.3 million in cash, enough to purchase another 1.3 million pounds at the current price. Since the 17th of August, when SPUT launched their ATM, their at-the-market financing vehicle, they've raised $864.3 million and have acquired just over 18.1 million pounds. So they have another 435 million left on this particular ATM. They can go to 1.3 billion. They can rinse and repeat and re-up that ATM. They'll probably add another billion at least. And at this rate, they will likely blow through this ATM by the end of the year, if not sooner. Turning to the sector equity ETFs, URA reflected a healthy increase in outstanding shares, 1.29 million shares. Equal to mandated amount of buying of 26.4 million. URNM reflected no change in outstanding shares. The assets under management for these two ETFs nudged up a bit, just over 8 million. With the two ETFs total combined AUM now at 2.38 billion, almost 2.4 billion for these two ETFs. A lot of money coming into these puppies right now. Let's take a look at the charts. Another big day for URA, up on very, very good volume. This is just an absolutely bullish chart. This is now probably a 7+ year high for URA. Just huge moves in the sector. And as URA goes, so goes the sector. Money flowing into this stock, into this ETF, obviously creates that flywheel that we've spoken about many times. They've mandated buying of their underlying holdings as they issue new shares, and the funds flow into this ETF. That's what we're seeing. When you see a big day, big volume day for URA and for URNM, and a big up day on good volume, then you know that is what is kind of keeping aloft the entire sector. Look at this beautiful breakout of that ascending triangle here. Just absolutely gorgeous. I love what I'm seeing here. Big volume, bullish on all fronts. The Sprott Physical Uranium Trust gapped up and sold off throughout the day a bit. Still, considering the price of uranium up only 25 cents, we are likely still at a healthy premium to their net asset value. Respectable volume here, not record volume like we saw last week, but I imagine they issued a number of shares today, probably raised another $20 to $30 million today alone. We will see shortly whether or not they bought any more uranium. These are really big moves, and the bull market is absolutely game on here. There's nothing about any of these charts that looks bearish to me. Somebody actually reached out and asked a question not that long ago about seeing negative divergence on the relative strength index for a number of stocks. And that's true. I am seeing that on a number of uranium stocks in the space. But if you go back and you look, this particular indicator and this particular divergence is not basically 100% guaranteed, at least not for a long-term situation. So you might see a short-term reversal based on a negative divergence, but in my opinion, the overall trend is the overall trend, and that clearly is up, with all the moving averages moving strongly up and the sentiment moving up the sector bullishness is really it's not quite where we are at, in my opinion, in terms of sentiment back in June. So I think we have a ways to run here, and this is all just a flow of funds story. And those funds are flowing, and they are flowing heavily into these ETFs and into the Sprott Physical Uranium Trust, just as we had predicted they would back in December of last year when we first started to see this move. It became clear that what was happening, even before the Sprott Physical Uranium Trust development, what was happening was that these institutions were positioning themselves in the ETFs, in the uranium sector equities, and then they were going to go after physical uranium, with the financial sector going after this physical commodity that is in tight supply. Has clear implications as we're seeing almost on a daily basis here, and as we've seen explicitly since August and the ATM went live for SPUT, that these purchases of a relatively small amount of uranium, right? So we're talking, the first 4 weeks they purchased just over 10 million pounds, and the price went up 60%. So we're seeing big moves in the underlying commodity based on these physical purchases. So that was the whole thesis, was that the positioning would happen in the equities first, and then they would go after physical. And now we're seeing that happen simultaneously. We're seeing the sector, the big money seems to be allowing the sector to kind of sell off after making these big moves. You go up on big volume, and then they'll just let retail sell it down for a week or two. Then they come back in with more just massive volume coming into the ETFs and the Sprott vehicle at the same time. So it's just this dual flywheel that's happening here. I'm going to check to see if we have a question here from the mailbag. This question came in on Friday's episode from Chaz on YouTube. Chaz asks, what do you think of all of the China news with their new reactors planned? Now, I did speak about this last week as well, but in my opinion, this bears repeating, because this is really understanding the implications of this and of some of these other fundamental developments, like Sprott taking over the Uranium ETF, like the EU taxonomy situation with nuclear potentially being included. We should find out later this month, but understanding these fundamentals and the implications of them really goes to help an individual investor to hang on in a very volatile market and stay long. So yes, China, the chairman of CGN, China General Nuclear, announced last week that China is planning to build 150 new reactors in the next 15 years to meet their goal of having 200 gigawatts of nuclear by 2035. Now, there's multiple reasons that they're doing this. One is obviously they have major problems with air pollution, right? Secondly, they're building basically a coal power plant per week. That's the pace that they're building coal power plants right now, and they need to match that. And at least, have a similar pace in nuclear so that they can eventually replace some of this coal power with nuclear, considering multiple factors. One, obviously the air pollution. Two, the energy density of uranium. Three, the reliability of nuclear. China, just like many other countries, is having somewhat of a crisis with energy right now, having access to sufficient oil, natural gas, and coal to power all these plants. They've actually had to shut some of these coal plants down over the past month or two. And nuclear, being able to stockpile uranium, stockpile fabricated fuel, stockpile, enriched uranium, you can store so much uranium in such a small space that the energy security that comes from having these reactors built and the fuel stored safely is huge, and it cannot be matched. It cannot be matched by any other energy source. The renewables just don't have the reliability, especially for a country like China that's just kind of going all out in their own growth. And they have their place, but you have to have either storage of that energy, which the technology is, they're working on that, but it's just not quite there. Or you have to have a baseload energy source that can cycle up and down to match, to balance out the inefficiencies of solar and wind. So nuclear ticks those boxes really well. And so for China, if they do follow through on this, which basically I believe they will, because they tend to follow through on these sorts of promises, if they build 150 reactors, and there's 18 under construction currently in China, by the way, in the next 15 years, that's more than the rest of the world has constructed in the past 35 years. Bloomberg estimates that this goal of adding 147 gigawatts, they're currently at just over 50 gigawatts, will cost China as much as 440 billion for this build out. Now, of course, China being the People's Republic, which is essentially the Chinese Communist Party, they basically just say what they're going to do and then they do it. This doesn't need to run through a whole web of bureaucracy. This is something that we believe that they will follow through on. And now, so they're holding, probably a few £100 million of inventory currently. And that, in my opinion, is going to remain a strategic reserve based on these plans. That is not pounds that's coming back into the market. They also, as we know, just recently announced in the past few months that they are going to jointly with Kazatomprom set up a stockpiling warehouse on the border of Kazakhstan and China to store up to 60 million pounds of uranium. They also just continue to seek out new JVs. There was a new JV with Kazatomprom announced this year, the Orlik project with China. So China is not messing around here. And so these sort of developments we take very seriously. And in my opinion, that's why we're seeing such a lofty and supported bull market currently in uranium. Is just who's selling here. The sellers have basically vanished. So it doesn't even matter how much money does come into the sector if the sellers are not there. You see some of these stocks with really low floats, which is this the float is the free trading percentage of shares in the open market that isn't held tightly by insiders, by management. And so if you see a stock with low float, sometimes it doesn't take a lot of buying to make it move. And you can extrapolate that out into the entire publicly traded uranium market. There's just not a lot to own here. And when funds flow into it, it moves really, really strongly. And if the sellers have been washed out, as they have repeatedly, they washed out really hard in July and August. And then once, Sprott came into the scene and all of these other developments just keep stacking on top of one another, then the selling pressure diminishes. Therefore, the bull market just kind of keeps running, and we will continue to see these higher highs, higher lows, right? And at some point, we'll probably see a bigger correction in the bull market. But man, I'm telling you, it's important to understand the implications of this. And so the other implications with the China news is that the nuclear fuel market and the players and the fuel buyers and the utilities, they pay attention to these things as well, because they know that there's going to be this state enterprise essentially that's going to be seeking out more uranium from the market and definitely not selling that back into the market. And so that means less uranium for the rest of the world, essentially. And any utilities that are uncovered, 2025 to 2030 and potentially even beyond at this point, they're probably going to start thinking about covering that with term contracts. And this is really healthy for the market. And it's what we need to see, especially considering that we have this price insensitive buyer in the market currently with the Sprott Physical Uranium Trust. Their purchasing right now is over 70 million pounds over the next 12 for annually. So they've purchased 18 million pounds in almost 3 months. It's the setup here is really incredible. And so I just wanted to speak on that a little bit more. I know I mentioned it last week, but I just wanted to touch on a couple of those things. And the other thing is that China can build these incredibly cheaply, far, far cheaper than most other countries can. Again, not really dealing with a whole lot of regulations and bureaucratic red tape. They just kind of do what they need to do. And so that makes, these types of goals, if the United States or if France or if a Western country said, yeah, we're going to do this, we're going to build 50 reactors in the next 15 years. Like, yeah, no, that's not going to happen. There's no way that the United States could pull that off. I mean, they're having a hard enough time building, 2 reactors currently. So it's just important to understand these things going forward in this bull market, because it does get volatile, and to stay long and to stay in it is not easy. It's simple, but it's not easy. And to have the conviction to buy on weakness and to hold on strength it really takes it either takes experience or it takes a deep understanding of the fundamental setup and what exactly is moving these stocks, which is the flow of funds. It's not a valuation play anymore. It's not a contrarian play anymore. It's a flow of funds situation. It's an energy play. And all of these factors are coming together and coalescing to create this opportunity. I'm going to end on that note. And I just wanted to let everybody know that If you are not a member currently, please click on the link below in the show description, and you will receive a free sample of our newsletter from previous month. You'll get an idea of the type of content we put out. We always go way deep into the macro on these monthly newsletters because, for the same reason as just mentioned, it's so important to understand these factors. And of course, as a newsletter member, you receive our focus list of recommended stocks in the space. We have a process that we put every company through to recognize the opportunity for that company. We look at share structure, we look at jurisdiction, we look at management, we look at a lot of different factors to churn out what we feel are the best opportunities, and we've done really well so far. And if you are not a member, you have 3 weeks at this point until December 1st to join at the current price before we raise our prices on December 1st. Anyone who joins before that date, you will lock in the current price for as long as you want to remain a member with us. So next year, if you decide to continue on with us, then you'll pay the same price that you pay when you join. And that goes for anyone who's already a member as well. If you have any questions, send us an email, support@uraniuminsider.com. We'll let you know, do what we can to answer your inquiries about our service. And like I said, if you want a sample newsletter, click the link in the description below and I'll pin it to the top of the comments as well. Also, please like this video, share it around if you wouldn't mind, if you appreciate this content. If you subscribe to the channel and hit the notification bell, you will be reminded and notified whenever we release a new episode, which is almost every day. Really been appreciating all of the support. Thank you so much for tuning in again today, and I will see you all tomorrow. Cheers.